What's up guys, Dan Kohan here, and in this video I'm going to be telling you the difference between private and hard money. What is the difference? Why is this important? And which one is better for you? If you're watching this video, you're probably in the flipping business and you are trying to figure out what is the best financing for your deals. Now, if you're a flipper, for me at least, my goals is to have the lowest cost possible for money. I'd like to get my deals 100% financed if possible, have the longest, best terms. But with that, there's a lot of lenders that can finance your deals. Now, we're going to go over a couple of them in this video. There's a lot of them. There's hard money lenders, private lenders, banks, brokers, all sorts of other stuff as well. But we're going to focus on private money and hard money in this video. So what is the difference? So private money and hard money are thrown around interchangeably on the internet and on Google. And if you were to search private money lenders on Google in your area, you are probably not going to find private money lenders. What will show up is hard money lenders masquerading as private money. And it is technically true that they are private money, but they're really not. Now, let me explain. A hard money lender is somebody that is basically a broker of private money. They typically charge quite a lot. They're not regulated by the government, banks, and things like that. So they can typically loan on distressed properties, rehab projects, and they typically don't need your credit or income or anything like that. It's totally property based. They're only concerned about the value of the property as it sits and the value of where it will be, and then how much rehab you're going to put into it, and then what that margin is going to be, profit margin at the end of the deal, because they're ultimately concerned about, is it a good deal? Because if you default, because they're not checking you as a person, they're not checking your credit, they're not verifying your income like a bank or a broker would do. They are simply looking at the asset, because what they're most concerned about is that a lot of flippers, especially new ones, they fail. They don't buy good deals and they default. That is why the hard money is very hard, because it's expensive. The reason it's expensive is because the lender is taking on a lot of risk to lend virtually anybody, give them a loan for hundreds of thousands of dollars. They're taking on a big risk by giving you the money. So it's very expensive. But in return, there's not really a lot of the same hoops that you have to jump through with a bank. And they can also close very fast, usually within 2 weeks, whereas a bank takes a month. And especially with deals where people need to close quick, typically you're not going to get 4 weeks to close, especially if it's a really good deal and they're in a dire situation. They need cash now. What can you expect to pay for a hard money lender? It varies greatly, especially with rising interest rates. I would say that you can probably expect to pay anywhere from 9 to 15% interest. You'll probably pay 2 to 3 percentage points of the loan in fees plus extra fees. Some of them have monthly payments. Some of them have where you pay at the end of the loan term. Very expensive relative to the bank. Keep that in mind. If it's the difference between doing a deal with hard money or not doing a deal at all, I would take a deal with hard money all day long, as long as it's a good deal, because even if the hard money is making money, as long as you're making money and you're making progress, that's what I would do. I have done a lot of deals with hard money. We have made a lot of money by doing them, but it is a stepping stone. Now let's talk about private money and what private money is. True private money are people that are individuals. These are typically not companies. Okay, these are just guys. These are investors, people with a lot of money, whether from their business or they're retired. Really anybody that has a lot of capital saved, whether it's cash or in a 401k or something like that, are interested in lending it for your real estate. Typically, you're going to be using it for, depends on the deal a lot of times, but in this case, we're going to concentrate on flips. And so they will lend you money to flip houses, whether it's the purchase price, the rehab costs. It varies greatly, because with true private money, you're just coming up with the terms with the lender, with your relationship. Whatever you can agree on is what you'll do. So it's very flexible. And with that, you can do a lot of things that most people with guidelines you could have with creative finance deals. Like we have a deal where we have a really good term with the seller, but we need money for the rehab. But a bank usually won't do a second lien loan for a rehab cost, but a private money lender probably will, because ultimately they're not really investing in the properties. They're really trusting in you as the operator, as the business person, to make them a return and get them their money all the time. And so they're trusting in you. They're a lot more flexible on what you're doing. They don't really care most of the time what your deal is. They just trust you and that you're going to buy good deals and pay them back. They're going to be a lot more flexible and probably a lot cheaper. As a single person, they have virtually no overhead related to the lending business. And so they probably won't charge you any points. You can probably get a good interest rate with them, whatever you feel like it's fair. Obviously, you want as low as possible, but they have to make money. So you want to just come to an agreement. That's what private money is. Real, true private money relationships, they can come from anywhere, unexpected places. Your friends, your family, they could potentially be lenders, but it's going to come from relationships. It's a very relationship game. It is not a transactional game finding private money lenders. It is very relational. You really have to, you need to be going to coffee with other investors. You need to be having dinners, going to meetups. This is where you're going to meet these people. And sometimes you're not going to meet them directly. I met a guy that was a referral because I had lunch with an investor and he gave me his private money contact. So these are the things you got to be doing. You have to be a good operator. But once you get a good reputation, this is going to take time. I've been investing for 2 years, and it's really only in the last 6 months that things have really started to pick up for me. I've gone full time into investing because I've been posting, because I've been active. A lot of people are coming out of the woodwork to support what we're doing because we're proving ourselves to be good operators. We're very public. We're showing everyone what we're doing all the time. So it's very trustworthy. And when you build that trust, when you build that reputation, people want to be on board your journey. They want to help you. Go out there and make those relationships. But that is the difference between private and hard money. Typically, private's going to be better. I will be striving for those relationships all the time. If it's the difference between doing a deal and not doing a deal, do the deal, however you can. Because a good deal, even if it costs a little bit, is better than no deal any day of the week. With that, I hope you liked the video. If you did, please hit the like button, hit the subscribe, check out this other investing content right over here. I'm Dan Kohan, and I will see you guys in the next video.